Now, to try to get this straight, you've been named, congratulations by the way, CEO of Dow Chemical. That is one of the three companies that will be spun off next year.
Right. The new materials science company will be called Dow when we spin it out at the end of first quarter 2019.
So let's talk about that component of DowDuPont that we just reported on and how you see the second quarter and looking forward.
We just delivered the 23rd consecutive quarter of year-over-year earnings growth. We had top-line sales up 18%, EBITDA up 26%. So we've had broad-based growth, organic growth from a lot of investments that we've made. We overcame about $400 million of cost headwinds. Our biggest costs are obviously hydrocarbons feedstocks that we use to make our products. We had about $100 million of higher turnaround activity in the quarter. So we overcame all that and had a very strong quarter. But I think the key thing was that volume was up 10% for us. That's market as well as some of our organic growth and investments. Price was up 5%, and we had a currency tailwind of 3%.
When you say volume's up 10%, is that because the overall market is growing, or are you taking market share from others?
So at this kind of GDP rate around the world, we see all the geographies around the world growing. And at this kind of a GDP rate, we grow at 1.5 to 2 times GDP. So I'd say a normal growth rate in our packaging, especially plastics business, for example, would be 6%. We grew 9% in the quarter. So we are growing above because we made these investments. We had higher equity earnings from our joint venture. So our Sadara joint venture had a higher return year over year. Our Kuwait joint venture had a higher return. Across the board, every business, every geography had greater volume, greater pricing. You don't see this robust economic result or business result very often.
Well, and to that point, it's my understanding that you're predicting that you'll grow more in the single-digit percentage trajectory in earnings in the current quarter and perhaps going forward. So talk to me about what happens now. If it's not frequent that you see that kind of growth, does that mean then that single-digit percentage gains are going to be more the norm? Well,
I think what's happened is we're going to lap some of the big projects that we brought online. So the Middle East plant in Saudi Arabia, our joint venture with Saudi Aramco, has been online now for about a year. Our U.S. Gulf Coast investments have been up and running. So as we get into third, fourth quarter, we're going to lap those investments. We have now high return on capital incremental expansions that are coming. So we've got one coming in Texas. They'll be online the end of next year. We've got 2 plastics plants that are coming on the end of this year. So we're continuing to step that growth up. But these high double-digit types of numbers probably will moderate more to just above the 1.5, 2 times GDP level.
I want to ask you about ethylene prices also. We've seen ethylene prices go down to a multi-year low. There's been a lot of supply because Dow and some other companies have been building more plants that some of which you've just been discussing. Do we lap that as well? Do we start to see that normalize once all the plants are online, or how does that play out?
Well, you have a bit of a timing phenomenon in ethylene. So ethylene is not very widely traded down in the Gulf. Most producers are fully integrated back to ethylene. So what we look at is the full chain margins to the derivative. So what's the polyethylene to ethane margin? What's the polyethylene to naphtha margin? And that full chain margin. And what happens when you bring on these new projects is you get disconnects in the market. So right now there's not enough derivative capacity in plastics or in other ethylene derivatives to take all of that. So it doesn't go anywhere and the price plummets on it. That'll change over time. You'll get those balances right, and things will smooth out.
I want to talk about trade, because it's one of the things that was discussed in the earnings report. How is the trade situation affecting your company?
So far, it hasn't had a big effect on us. Obviously, our key raw materials are feedstocks, and so we're typically located where the feedstock sources are, so we're not shipping feedstocks around the world to get to our facilities. We export materials, and I think a lot of the market right now is concerned about the impact on the exports. But remember, we built our Saudi Arabian joint venture to service Europe, Middle East, Africa, and Asia. We built our Gulf Coast assets to service North America, Latin America. So from an exposure standpoint, we're sourcing our growth in Asia from the Middle East. We also export out of Canada. We export out of other locations like our joint venture in Thailand. So immediately, I don't see a big impact. We have to watch our customers. There is going to be, as we move through this, there's going to be some inflationary impact that happens through the value chain. So our packaging customers, for example, if they use aluminum and plastics, they're seeing aluminum prices go up. They're also seeing some plastics prices go up because oil's going up and gas is going up. we're in probably an inflationary period anyway because of those fundamentals, but we're having to just keep an eye on the pass-through of any of these costs. And what does that do to downstream consumer demand?
As a CEO, are you concerned about overall patterns on economic growth because of the trade situation? Because economists tell us if we really go forward and keep increasing the trade tensions, it will affect global growth, and that might affect the growth of the demand for your product.
I haven't seen that yet. About 70% of what we make goes into consumer products, and so if you look at the strength of the consumer, if you're in China, consumer strength is good. If you're in the U.S., consumer strength is very good right now. So I haven't seen it have an impact there. We'll have to watch that and see if that starts to back things up.
Talk to me about the spinoff of Dow, because you all, DowDuPont that is going in a split direction. One of your big competitors, BASF, is going in the opposite direction. So what's the strategy of the spinoff, and how does that put you in a better competitive advantage going forward?
Well, when we brought the two companies together, one of the key ideas was to take the ag businesses of the two and spin that out because we felt it would get a higher multiple on the market. On the materials side, we will be still an integrated company. We may not have the breadth of BASF, but we'll still be an integrated company in the 6 businesses that we're in. But we'll be much more focused, and that'll allow us to be a better capital allocator as we move forward. And we'll be able to continue to invest in organic growth to keep the growth rates that we talked about earlier. Whereas in the old Dow, we had 13 businesses to service, and we had to allocate capital across 13 different businesses. Kind of hard to keep them all up and keeping up with pace of GDP growth around the world.
Talk to us about jobs. It is Jobs Day here in the United States, and so we have to ask you about jobs. I'll put up a chart here actually that shows the number of employees in chemicals and in plastics over time, going back to 1998. Obviously, it all dipped down in 2009 when we had the financial crisis. It's come back some. Both chemicals is the white number, plastics is the blue, although not nearly the level that it was going back to 2000 or so. Right. What's your experience at Dow with employment?
It's coming back. Obviously, with all the facilities that we've built, we've had a fair amount of hiring. But we've also had a big change in demographics. So as we move to be more digital and build the digital Dow, we're moving more into robotics and to sensors and to data analytics. So we're hiring a different mix of people with IT experience. We need more skilled trades. So even though the numbers are coming back more slowly than they have been in the past, the mix has shifted. 35 to 40% of my workforce today are millennials. We're hiring at the rate of about 2,000 employees per year because you have to replace a generation that's retiring. And in some cases, we're rebuilding an industry that from the late 90s to 2011-12 had no investment here. But you're rebuilding it in a different way. You're rebuilding it to be a new company. And I always say to the people at work, if every company is not a tech company, you're going to have a hard time surviving in this world. And that has an impact on the type of people that we hire. People that want to work in IT think, oh, I've got to go work for Google and Amazon. Actually, you can do that work right here at Dow. We've got tons of opportunities there. We're bringing in skilled trade people. We're working with community colleges. We've got an apprentice program that's been going for 5 years at 10 different sites. We're bringing on a lot of new people. Veterans are coming in to work in the company, to get skilled trades to come to work in the plants. It's a generational shift. It's a step shift in the industry, and it's not the old industry anymore.
I just quickly want to ask about the cost cutting that's happened and that effect on the workforce. You sound excited about hiring these new folks. I'm curious how the people in the company are feeling and how retention is looking amidst some of the cost-saving measures that the company has had to take amidst this spinoff.
Sure. Anytime you go through a change, you're going to have some adjustments to the workforce, and synergies is a word that's very positive for investors and can strike a lot of fear in the hearts of employees, but it's been an adjustment. You're forming 3 companies out of 2. There are some redundancies in the work that gets done, and we've navigated through that. Our attrition rates are no higher than they have been historically, and we have been paying wage increases through this. So our wages have been going up 3.5% through this, and we're a skilled workforce company, so they're a little bit higher than the national average.
Jim, finally, you're a CEO at the beginning of what I hope will be a long tenure. As you look out, what is the biggest downside risk you see?
Yeah, I think we're always concerned about what happens to the global economy and what happens with the consumer. You know, if the consumer is healthy and the consumer is spending money, if we're able to continue to build housing, if the governments and everybody are building infrastructure, that's good for our business. If you start to see that slow down, that's when I think you have to have some caution. But right now, we don't see that.